Hello everyone, thanks for clicking on this video. For those of you who've not been to the new North Coast Angel Fund offices yet at the Global Center, this is it. This is where we have our day-to-day activities, diligence committees, screening committees, as well as periodic board meetings. The intent of the video is to give you a quick update on the member meeting which we had earlier this week. 75 people at Tucker Ellis for the unofficial kickoff of North Coast Angel Fund 4. So please join us. We'll give a couple updates and address some recently asked questions as well. Okay, welcome to the Reader's Digest version of this Wednesday's member meeting. The most important piece which we'll talk about here are the fund updates, but we will mention the portfolio company developments. A majority of members in the room voted unanimously to make an investment in MedPilot. This will be the first company in North Coast Angel Fund 4. MedPilot is a software as a service company which makes revenue cycle management products for the medical industry. Very exciting company. Plug and Play is a co-investor. Several local firms here in town are also invested, and we have high expectations for the company going forward. We also looked at a new company which is now in diligence, Performex. This is a software as a service company with a product for life insurance management. Unusually seasoned and unusually high quality management team for a company at this early stage. We're very excited to have them in diligence and think there's a good chance this will result in an investment as well. We shared our traditional deal flow funnel. This is the last time we will share this. As many of you noted, the font size is getting smaller and smaller as this reflects 3.5 years of activity. What we did want to share, though, was the roll-up of activity. Over the past 3.5 years, North Coast 3 looked at over 600 companies. 69 of those companies made it to the screening committee. These were companies that were generally in the areas we wanted to evaluate with credible teams that we felt we wanted to put in front of our membership. 51 of those companies were successfully advanced into diligence. Of those 51 companies, 18 resulted in an investment recommendation from the team, as well as an investment recommendation and vote from our members. Of those 18 companies, 16 resulted in an investment. Interestingly, that 2.5%, 16 of 600, is right on average of the National Venture Capital Association standards, which is interesting to see. From our perspective, whether we're at 2%, 1%, or 5% is not a big issue. We want to see 4 to 6 great companies to invest in a year, and our sense of the current deal flow going into North Coast 4 is that we'll absolutely have it. We provided a brief update on North Coast Angel Fund 4 and North Coast Venture Fund 2. Many of you know that the Angel Fund will continue to invest at the seed level. We're targeting a $15 million fund, which will invest at least $250,000 in each portfolio company. This is a member-driven process where the members vote and ultimately is balanced with the venture fund prospect, the venture fund approach, where it's a larger fund, $25 million, larger initial check sizes of $500,000, and instead of a member-driven approach, it's a management-driven approach where we're investing in what we think are the best of the best companies several years after the initial investment based on traction, how the companies have actually performed. Both funds have an identical fund management and structure, 2% management fee for each of the 10 years and a 20% carried interest. We provided an update on where these funds are in terms of attracting new members. 59 Angel Fund members are committed for North Coast 4, 30 are committed for the Venture Fund. The total commitments here are almost $3 million for the Angel Fund, almost $5 million for the Venture Fund. We've had an initial closing on the Venture Fund and made 2 investments, $500,000 investment in Navistone and a $500,000 investment in Remesh. We expect the 3rd investment out of that fund will be in Streamlink. These are all companies that we know from previous investments, have a strong track record, and have current rounds that are being led by third-party venture capital groups. So we're very excited to get such a strong start from these 2 funds. Change was a big topic of discussion at the meeting. We experienced a lot of change from Fund 1 to 2, from 2 to 3, and now, of course, from 3 to 4. We hold our portfolio companies to a very high standard to react to the environment, to be both proactive and reactive, and we want to hold ourselves to that same standard. So in doing so, we've developed a plan for what we're calling a strategy refresh. It has three components. One is a review of the investment thesis. Many of you have had exposure to this over the past several months, where we've had increased focus on early stage, which is seed, business to business, software as a service, looking for true high growth potential companies. This is based on an assessment of the quality of success and traction from the 55 investments we've made so far in North Coast 1, 2, and 3, and a finding that the companies that were invested along this particular line of thesis were meaningfully more successful than the others. 3 of our 4 exits were in this area, and an overwhelming majority of the companies that we invested in that are in this thesis are on the path to success. So this is what we think is the future of our investment thesis. The second piece here is operational excellence. This is improved deal sourcing, deal screening, deal diligence, as well as portfolio company support. We're doing this as a management team, and we have committees of volunteer members who are also working with us to set up appropriate processes so that there's more structure to ensure we have a repeatable process to deliver these types of results. Lastly, we're going through a branding exercise where we're evaluating the look, the feel, and the storytelling of North Coast. We think this is important as we go out and seek new investors, seek new portfolio companies to invest in, and seek new co-investors, because this is the first fund for which we're going to be looking at out-of-state investments. Many of you in the coming weeks will hear from a marketing partner of ours that will be conducting interviews. We want to hear from you candidly what you feel good about, what you wish there was more of, what you wish there was less of, and what you think we need to do to be more successful. We're also going to have a focus group of portfolio companies that we've invested in and early stage companies that we have not, as well as high quality VCs and angel groups from across the country to try to get more data points on how we should be orienting for future funds. We've received a lot of questions lately, so we've characterized these not as FAQs, but rather recently asked questions, or RAQs. They broke down into 2 general buckets, ones that are current state and ones that are future state. The current state questions were essentially, are we really done investing out of North Coast 3? Why is that? How much money is left for follow-on? And we'll answer that with several pie charts here. North Coast Angel Fund 3 is almost $10 million, $9.8 million. 20% of that over the life of the fund goes to management fee, and about $200,000 in addition to that goes to fund-related administrative expenses, specifically legal, accounting, any startup or wind-down costs of the fund. That makes about $7.64 million available for investment over the life of the fund. So far, as a membership, we voted to invest $3.8 million in initial investments across 16 companies. This translates to almost exactly 50% of the fund, which is our strategy. We'd like 50% of the aggregate capital available for investment to go into initial investments, 50% to go into follow-on investments. So far, our follow-on investments are $1.6 million, leaving $2.2 million available for follow-on investments. Our hope is that we will invest these disproportionately in those companies that are demonstrating successful outcomes. Those types of companies are raising money more often, and there are larger dollars available. The relationships that we have with the CEOs and management teams give us access to the deal, and really gets to one of the reasons why we feel we can be successful as a fund. Investing in high-quality companies that have outsized returns, but importantly, investing disproportionate amounts in those companies that are succeeding and are on their path to success. The future state question, one was around new hires. Many of you have seen that we've had an email out advertising that we're looking for several people to bring onto the team. The first is a controller or fund administration position. We're talking about this as a role because it's possible this will be an individual, and it's also possible that we would work with a third-party fund administrator. This financial position would allow for better reporting internally, better reporting to our investor members, better tax support, and financial support for our portfolio companies themselves. The other position is an investment associate. This will drive a great deal of deal sourcing, diligence, and portfolio company support. And importantly, both of these roles will take a lot off of the plate of the management of the fund, so we can continue to work on building the fund, attracting more companies, and building value. Additional future state. What is the status of Jumpstart's potential support for North Coast 4? Short answer is we don't know yet. Jumpstart, as many of you know, has been a terrific supporter and co-founder of the fund. They made 7-figure commitments for each of North Coast 1, 2, 3 management companies. And we're hopeful that they'll partner on North Coast 4 as well. They're going through a strategic process now as a board. A lot of bigger picture decisions are being made, and we have to wait to see that play out. But we're in close contact with them and very optimistic that it'll make sense for us to partner with them on Fund 4. We obviously have not been waiting. We're launching Fund 4. We have a plan to move forward with or without their support, but we hope that we'll be able to continue with much the same partnership we've had in the past. Similar question for the state in the Third Frontier program. We are very hopeful that there'll be an RFP for the Third Frontier program, the Pre-Seed Fund program. In the past, we've won these awards for each of Fund 1, 2, 3, and the Venture Fund. We're very hopeful that if there is another award, we will be able to successfully apply and secure that. We don't know if and when it will come out, though. We're staying tuned. Similar to the last question, though, we're not waiting. We're planning a fund that will work and be effective with or without the state support. Lastly, how will these out-of-state investments work? The answer is that they'll work very much like investments work today in Cincinnati, Columbus, and other non-Ohio cities. We tend to not lead those deals, although we're open to. We tend to have trusted partners that we've co-invested with in the past lead these deals, share their diligence with us. We continue to do our own primary diligence as well as to work with their team, and our team will remotely determine whether or not to move forward with an investment. We still anticipate that the CEOs will come to Cleveland to meet with our team. In many cases, our team will go to those cities to meet with their teams in their offices to better understand what they're all about and how they manage their organization. And our hope is that a third or more of the portfolio for North Coast Angel Fund 4 and the next Venture Fund could be from out-of-state companies. We view this as something that strengthens us as a fund. It makes us smarter. It provides better diversification to the portfolio. And we think leverages a resource, the goodwill and engagement of these out-of-state VCs and angel groups that we've built up over the past decade plus. Brief update on angel education. We are rescheduling our session, which was originally for early October. It will be in early November. Please stay tuned. You will get an update email shortly. And lastly, our next member meeting is Tuesday, October 29th at Shaker Country Club. This will be a great meeting you do not want to miss. We expect to have held the first closing for North Coast 4 by that time. We expect to have made the initial investment into MedPilot. And there's an excellent chance we'll have a new investment recommendation for Proformex, which may be the second investment out of North Coast 4. So things are happening quickly. We appreciate your support, and feel free to let us know if you have any questions. Thanks.